especially with real estate syndication, you need to be able to talk the talk. If you don't know what you're talking about with it, if you start to have a conversation with somebody, they're going to realize that very quickly.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it.
Hello and welcome back to Pillars of Wealth Creation. I'm your host, Matt Jones. Todd is traveling with his family right now, so I'm going to do this hump day hustle by talking about the book, A Best Ever Apartment Syndication Book by Joe Fairless and Theo Hicks. And this is a solid book about apartment syndication from start to finish. It really lays out everything that you need to know for the most part. It is over 400 pages long. It's got a ton of great information. So if you're looking to be an active investor with apartment syndication, where you want to be the general partner or sponsor that's putting on the syndications, this is a great, must-read book that tells you everything you need to know, how to set up the deals, how to find them, how to find passive investors, all that kind of stuff. Or even if you're just looking to be a passive investor to invest in other people's syndications, this is an excellent way for you to learn what goes on behind the curtains and what you need to look out for. So if you're looking to get involved in any kind of syndication in any form, this is an excellent book. So Joe Fairless, the main guy in this, he went from owning 4 single family houses to over 4,000 units. So apartment syndication is real. You can 1,000x your real estate empire by doing it. It'll gives you access to bigger deals and that you could ever do on your own. So it's really a step-by-step process. One great thing about this book is it teaches you the terminology that you need to know. There's over just a ton of different terms. In order to be successful in real estate, especially with real estate syndication, you need to be able to talk the talk. If you don't know what you're talking about with it, if you start to have a conversation with somebody, they're going to realize that very quickly. But if you understand and can use the terminology involved with syndication, then that's going to come out and you're going to be someone who knows what they're doing and knows what they're talking about, and people are going to take you seriously as a result. So I'll just kind of go through the different ways or the different information that you can find in Best Ever Apartment Syndication Book. It starts off by telling you how to get started. And it is really important that you use one of 2 requirements to become a syndicator. So, to set up yourself up for success, you need to start by educating yourself. And this book is a great way to do it, or at least to get started with it. And then you need some experience in things like real estate or being an entrepreneur, a business manager, or, just to get your feet wet to get into the door. And then also I would say that you need to work with other people. And I'll get into that a little bit more later. But there are different ways to make money in leading a real estate syndication. So there's a profit split. So after the expenses are paid, then you and the passive investors split the profits in one way or another. There's also an acquisition fee. So usually anywhere from like 1% to 5% upfront fee that goes to the general partnership. And there's an asset management fee that covers the cost of like touring the property from time to time and going out there and stuff. And then there's the property management fee if one of the general partners is managing the property itself, refinancing fee, and then there's also a guarantee fee. So those are if the property sells or refinances. Next, the book talks about setting your goals. I think that's really an underrated aspect of real estate investing that a lot of investors don't necessarily look at. I think a lot of investors focus on like the deal and finding the next deal, whereas setting your goals, which this book talks about, start with the end in mind. Start with your why. Like why are you doing these deals? What are you hoping to achieve, and what is that success going to give you? Because if you don't have that clear, then you're just kind of wandering around in the dark. So I really appreciate this, and any kind of references Tony Robbins a bit as well, which I'm a big Tony Robbins fan. Next thing is the book is about building a brand in the real estate syndication business. It means that you're building credibility. Without that, it's really hard to do any kind of business in real estate syndication. So, your brand is who you are, what you're about, what your company is. And there are different ways to build a brand. It's you can create a thought leadership program, or this is kind of a collective interview-based online network where you provide free content, which is going to be valuable for your network of people. So, this could be a podcast like the Pillars of Wealth Creation podcast, or a YouTube channel, a blog, a Facebook group, a newsletter, a meetup group, that kind of thing, where you're providing free or very inexpensive information to people and to show you that you are an expert. And in addition to your thought leadership program, you can start an in-person meetup group, which is really great. Todd and I, we have one called Multifamily Mastermind. And so you can find that on meetup.com or on Facebook as well. And then that way you can expand your knowledge and expand your network at the same time. So your brand has some main components to it. So you need a company name with like a logo, maybe business cards that is easy to pronounce, easy to remember, that creates a compelling image of who you are and what you're about. You need a website. And this is a really important step because it's the first thing people are going to see when they search for your company online. It gives you credibility as well as generate leads of potential investors. Then you need a company presentation of sorts where you present yourself of like how you can provide solutions to investors, introduces your business, and says what you do. So you can explain to your potential investors, this book talks about how you explain to your investors that you approach deals with the 130-10-1 rule, which is pretty cool. It's essentially going through the numbers. So you have to look at about 100 properties in order to find 30 that are worth taking a deeper dive at. And then of those 30, maybe you put offers on about 10 of those. And if you put in about 10 offers, then maybe you're going to be able to close and purchase one of those properties. And that ratio, I think, varies a little bit depending on what the market conditions are. But generally, that's, kind of rule of thumb where things are at. So, it also talks about how, like, when you're looking at properties, this book, when you're looking at properties, what to look for in them. Next, it talks about the 3 immutable laws of real estate investing. The first one is buy for cash flow and not for appreciation. I really love that because, regardless of what the market is doing, if there's a downturn, and I think a couple banks, big banks, are now projecting a recession here in the near future. I don't know if that's going to happen or not, or when it would happen, or I certainly don't have a crystal ball. But by investing for cash flow, you're going to be able to hold on to a property, even though there's a downturn in the market, if there is one, so that you can then sell it later on if you want to. But if you're, buying for appreciation and there's a downturn in the market, you're going to be in danger of potentially losing that property. So second rule is to use long-term debt to your advantage. And you want some debt to increase your leveraging ability, to increase your buying power, but you don't want to over leverage yourself by having too big of a mortgage that becomes burdensome if there is a downturn in the market. So the lower mortgage means less leveraging, but lower risk. So the opposite is true as well. So it depends on like which balance you want to find in your investing. Law number 3 is to have sufficient cash reserves to handle things that come up from now and again. And things will come up. So you want to make sure you have cash on hand to cover the incidentals that are definitely going to happen sooner or later. So next, the book talks about deciding on your investment market. Because seriously, there are over 19,000 cities across the United States. So don't try looking at deals in every single market. And not all markets are created equal. And even like one city will have submarkets, different neighborhoods within it that vary greatly. So you really want to narrow it down. The more you narrow it down to a specific market or markets, the better off you're going to be. Anyway, so Joe and Theo, the authors of the book here, they use 6 steps to evaluate a market. The first thing is they record the demographic and economic data, and that includes things like unemployment, population, economic or age, diversity, top local employers, the supply and demand of units, and miscellaneous things like the local property taxes and friendliness towards landlords. The second thing that they look at when evaluating a market is they are going to interpret the data that they have collected. From there, they rank their top 7 markets in each of those criteria. And now from there, they select 1 or 2 of those markets to really take a closer look at. Next, they analyze about 200 properties within those 1 or 2 markets. And finally, they create a market summary report. And there are free ways to get this information online, like census.gov or city-data.com, or they have great reports to help you analyze those criteria in the markets that you're looking at. And so they do a great job of showing how to break down and analyze different markets to decide what is going to be best for you. Like when I was first looking at markets, I had 65 or so that I identified. And then I just, rank ordered all the different kinds of criteria and narrowed it down. And I was surprised by the market that I ended up with, to be honest, that was my target market. I didn't really know much about that market beforehand, but it checked all the boxes. So you really want to identify what is the right market for you based on your investment strategy and your interests and what's going to be able to allow you to raise capital for those kind of properties. All right, the next thing the book talks about is building your real estate team. This is essential, and you cannot do real estate syndication on your own. I mean, you could try, but you wouldn't do very well at it. I think for me, it's similar to I could build a house from start to finish on my own, but there are so many different specified skills and, so I could try to figure it out all on my own, and it would take me so much time and effort, and I wouldn't do a very good job of it. But by having a team of highly qualified professionals working in sync together, a better house is going to be built, more solid and long lasting and quicker and cheaper than I could possibly do on my own. So your real estate team is going to consist of potential partners, real estate broker, a lender, real estate accountant, a real estate attorney, securities attorney, property management company, and like a mentor or a consultant of some sort. And so I'm going to put in a little shameless plug here. The North Star Real Estate Conference this year is going to be May 2nd and 3rd here in the Twin Cities. And it's going to be all about building your real estate team for multifamily investing. The idea is that you come on those 2 days and you're going to walk away with knowing who your mortgage broker is going to be and who property management can be for you and real estate attorneys and potential partners and things like that. So because Todd's out of town, I'll don't tell him I said this here on the podcast, but if you go to northstarunlimited.live and sign up with the coupon code Jones, Jones, it's going to give you $100 off. So, if you haven't bought your ticket yet, I highly recommend. This is the event of the year for multifamily investing here in the Twin Cities. And again, it's all about building your real estate team, because you can try to do it on your own, but it's not going to be working out so well. Okay, so next, the book talks about finding passive investors. And so unless you're going to, buy all these deals by yourself with your own cash, and if you're buying like 100 unit plus apartment complexes, maybe you've got enough money. But I think a general rule of real estate is like, if you keep on buying real estate, eventually you have to use other people's money. So, if you need passive investors, which is a key component of real estate syndication, there are different ways to find those investors. And I think this book does a great job of laying out some of those top ways of finding those. First one is to, start that thought leadership program. Another way is to join Bigger Pockets and use your profile for advertising what you do and participate in the various forums. You can join a real estate meetup group or start one of your own if there's not a good one in your area. You can volunteer at nonprofit organizations and connect with the board members, who are usually affluent people. And then finally, you can connect with your personal connections, which is, I think, the main way people start, by raising money from their friends, their family, their coworkers, acquaintances, that sort of stuff. So once you have your investor list of your potential investors, I should say, it's time to start talking with them. Start talking with them over the phone or in person, over Zoom, whatever. And, just to tell them what you're looking for, what you're doing, because if you don't tell people, they're not going to know. So you really have to put yourself out there. And inevitably, you're going to have some of the, questions and concerns that people will express. And Joe and Theo, they cover 49 of those top questions and concerns that people, like potential investors, are going to have of you. Things like, what kind of experience do you have? Or why should I invest with you instead of another syndicator? How am I going to get paid as an investor? How are taxes going to work for me? What are the risks involved? What happens if there's another recession? All these kinds of things that you don't want to be caught off guard with. So, they talk about the different kind of questions and objections and how to answer those. So this book honestly is worth its weight in gold and then some. And it's a big book. It's over an inch thick, over 400 pages. Is a quality book. So next, it talks about how to find great deals within your target market. Or, if you lay out like one, maybe two markets, like you really want to focus and find great deals within that, you're better off. And they explain this really well in the book about how to narrow down like a niche sort of kind of property. You want to decide, look, are you looking for distressed properties or turnkey properties, or, in the middle is value add, like distressed or high risk but high reward type of properties. Turnkey are low risk, low reward, whereas value add is kind of in between for both. And Joe and Theo, the authors, as well as Todd and myself, we really like the value add component of real estate investing, because we have some semblance of control of making the property worth more and function better than it did beforehand, and making good profits as a result of our efforts and knowledge. All right, so there are different ways for finding deals. Like you could do it off or on market, which is like through real estate brokers, and you just build some relationships with brokers in your target markets, and tell them exactly what you want. The more niche of a kind of property, the better. Because if you just say like, oh, I'm looking for properties, well, there's a million different properties, a million different kinds of properties that they could send you. But if you say, specifically like the age of properties and size of properties, worth of properties, neighborhoods, things like that, the more niche you can explain to brokers, the better off you're going to be to find the actual kind of properties that you'd want to buy. But you can find off-market properties too. And there are different ways to do that. And some of those ways include doing direct mail campaigns to sellers, or doing cold calls to them, or cold text messages, or there's voicemails that you can send as well. You might have local team members that can be a good resource for finding off-market deals. And you can look at for rent ads online or around that have vacant units, and they have that essentially means that there's a problem for that property, and you can potentially fix that problem by buying the property from the seller. All right, next, the book talks about underwriting a deal, and this does well at talking about like the kinds of things you want to consider with underwriting a deal, but it doesn't really explain. And this is one of the faults I would say of the book. It doesn't. You don't walk away knowing how to underwrite a deal. You really want to learn from somebody who knows what they're talking about when it comes to underwriting. And you can buy an underwriting model from somebody, or you can, there are some places you can get one for free, or you can make your own from scratch as well. I recommend buying one because and like the person that or people that you buy it from can teach you how to use that underwriting model. And so essentially, when you go to a seller, there's some forms that you need to get from them, and then you input that information into your underwriting model, which might just be an Excel form. And then spits out like what you can offer for the property. So the kinds of things that you need to get from a seller include the current rent roll, the trailing 12-month profit and loss statement, which is called the T12, and the offering memorandum, or OM. And the OM is only if it's on market from through a broker. But I know Rob Beardsley has a free underwriting model that he gives out, and he wrote a book actually about how to use that underwriting model. Todd has one, but he doesn't give it out publicly. If you pay Todd to coach you or to be in one of his masterminds, then he'd probably give it to you for free, as included with that payment, I suppose. But anyway, underwriting is such a big undertaking. if you're not good at math or Excel, it's something you can hire out, certainly, but it helps to know at least how underwriting is done, so that you know whether to tell if a property is good or not. And when you're sorting out these hundreds of properties that you're going to be assessing, like the more effective you are and quicker you are at being able to assess from the get-go, does this property pencil out? No, throw it away and move on to the next property. The better you are at that, the happier you're going to be. Okay, next step in the book here is submitting an offer. Once you've narrowed down to find these few properties that are actually worth buying, and a price that you are close at with what the seller wants for it, then you submit a letter of intent, or LOI. And this is not a legal binding document by any means, but it essentially tells the seller what the purchase price you're offering, structure of the financing, earnest money, length of due diligence period, and schedule for the closing as well. You can even have multiple offers in there within your letter of intent, hey, if I buy it through bank financing, here's what I'll offer you in the terms. If we do it with seller financing, here's the terms and the price for that, or some other options as well. Then the seller can either reject, counter, or accept your letter of intent. And so if your letter of intent is rejected, then you can decide whether to submit a better offer for a higher price or better terms or whatever. And there's lots of negotiation that goes in there. Often, if you negotiate better terms, it's okay to pay a higher price as a result. Okay, next big step. Once you have a letter of intent that is accepted and you have the property under contract, you got to begin what's called the due diligence. You would have already kind of taken a deep dive into the property and understanding it, but the due diligence is you're walking every single unit and you're looking at every single lease with every tenant, and it's a super deep dive. And there are 10 due diligence reports that you're going to need as part of this process. There's the financial document audit that compares the property's historical operations against what your budgeted income and expenses are. There's the internal property condition assessment, or PCA, which is made by when a licensed contractor inspects the entire property and gives you a sort of a to-do list of all the needed repairs. There's a market survey report, which is where your property does a more in-depth version of your market comps or comparable sales. And then the lease audit report is when your property manager inspects and leases for all the units to take note of their rents and security deposits. There's the unit walk report, which is when you or your property manager walks through every single unit to document their condition. And there's the site survey, which is a map of the boundaries and the lot size of the apartment community that's done with a third-party vendor. There's the property condition report, which is the same thing as the property condition assessment, but this is done by a contractor that your lender has chosen. There's also the environmental site assessment done by a third-party vendor to see if there's any possible environmental contaminations. This is especially needed if your property is in a place that used to be an industrial area, so there might be underground oil tanks or things like that. Here's a side story. I heard of one property I think it was in Florida, where they did an underground radar as part of this environmental assessment, and they found that whoever had built the apartment had built it on top of an old graveyard. So there was all these coffins and dead bodies underneath the lawn and stuff like that. So it's a big deal with that. So really interesting things that can come up sometimes with these reports. Hopefully it's all boring and stuff that you knew about and planned for, but sometimes there are surprises, certainly. All right, the other couple reports that you need: an appraisal done by an appraiser who determines what the property is worth, and then a green report, which is an assessment that tells you if there's any ways to improve the property by making it more energy efficient. And honestly, this is one way to make the property operate better and be worth more at the same time, is by doing things like installing low flow toilets, or if there's any leaks in the pipes, fixing those, or installing LED lighting in the common areas, things like that. Okay, next, the book talks about finding the capital for investing. And this comes in two main parts. There's the mortgage from the lender, as well as cash from investors. So, there's this old adage that if you find the deal, the money will come. But I think that's bullcrap, honestly. You need to have the money lined up in advance. So you need to talk to potential investors first to get kind of soft commitments from them of what, so how much money you can raise. If granted, you can get a property under contract and then start at that point looking for money, but it's going to be a mad scramble. Oh my gosh. You want to have the money kind of ready in the back of your mind of like, okay, now I've got the property. Now I need to talk to my list of investors and say like, oh, hey, John, you said you could invest for 50,000, and Bill, you said you could invest for 200,000, and Susan, you said 250,000 was, here's the deal that that I've been talking about. Finding these kind of deals. I found one. Let's get this done. Okay, so next, so as part of the raising capital from investors, there's a few things that you do. You're going to need to set up a kind of a Zoom call or some kind of webinar to explain the deal and all the details involved with that, including like a question and answer session and the next steps. This book talks about the 30 most commonly asked questions that you'll get in a webinar. And these are things like, what is covered by insurance, what the minimum investment is, how often you're going to communicate about updates on the property, when the investors should start to see a return on their investment, that kind of thing. So again, this book sets you up for success with knowing all the steps and things to plan for and things to know when it comes to apartment syndication. Like, you could try to figure all this stuff out on your own, but honestly, just buy the book and read it, and you're going to set yourself up for more success than trying it on your own. Okay, and then also there's a bunch of forms that you need as part of your investors are going to need. So there's like the private placement memorandum, there's the operating agreement, a bunch of stuff, and you really need a syndication attorney and real estate attorney to fill out this paperwork in advance, so you've got it ready. You don't want to try to like use it on your, or like write it on your own, or repurpose it from a different investment. And this book, another criticism I would have about it talks a little bit about the legal aspects of real estate syndication, but doesn't really get super in depth about it. Like, it talks about the difference between 506B and 506C offerings, and like what qualifies as those, what the kind of general rules around that, but it doesn't really make you an expert of knowing all the details. So you want to start with this, but then consult with the real estate attorney, the syndication attorney, a CPA, all these professionals to make sure that you understand. And there's plenty of money to be made in real estate following the laws. Like, you don't have to break any laws. You can just follow the laws and make a ton of money and do well. So you want to make sure that you are consulting actual professionals with all this stuff, so that you're following the laws. In this book, while it talks about like 506B and 506C offerings, there are other types of real estate syndications, like a Regulation A or crowdfunding. It doesn't really talk about those, but that's okay. I would say the main ones are what's covered in this book. Okay, next thing the book talks about, closing the deal, like what you need to line up right before when you're getting ready to close the deal, and then also following the business plan. There are lots of responsibilities that the asset manager in the general partnership has to make sure that the business plan is followed and executed. So like the units are getting renovated, the rents are getting to be where they're at, you're increasing the occupancy rates, you're paying attention to the market, so you know when to sell or refinance, that kind of stuff. All right, so in conclusion, this book, it's lots of information, but it's an easy read overall. And I wrote a book about real estate, which is about a book about other real estate books, and one of my chapters actually covers this book. So if you want, I'll give you my email address. If you email me and ask for it, I'll send you a free digital copy of the chapter that where I talk about this book. So it gives you an idea of whether or not you want to buy this book. And honestly, I recommend that you buy the book. But if you want a free, kind of chapter, like I condensed this book down to a chapter worth of material, I'll send that to you. Just email me. matt@hawkwingcapital.com. And I'll put this in the show notes, but email me for it, and I'll be happy to send it to you. But this book, it's really long. It goes into a lot bigger detail than I have on this podcast or I have in my chapter about it. So if you're serious about learning more about real estate syndication with apartments, then this should be your go-to book. Well, thanks, and make every day a Saturday.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.